Good morning, I'm Maiki Oreta, and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. Now, after 4 years, the Philippine Central Bank finally cuts key interest rates amid hopes of slower inflation. Expectations, the Bangko Sentral ng Pilipinas reduced the key rate by 25 basis points to 6.25%. BSP Governor Eli Remolona also hinted at another 25 basis point cut by the end of the year. Now, while inflation rose to 4.4% last month, the central bank says that inflation is still projected to trend downward within the government's 2 to 4% target range. The last time the BSP cut rates was back in November of 2020. This to spur growth following the COVID-19 pandemic. The lower interest rate environment is seen to spur economic growth as it positively affects bank lending volumes, consumer spending, and overall market participation. I spoke to BPI's lead economist, Jun Neri, about this, and he says given the central bank's looser stance on monetary policy, he's quite confident that the government will achieve its growth target for the year. Now, here's that interview. Hi, Jun. Thanks for joining us.
Thanks, Mikey, and hello to your viewers.
Okay, so Jun, did the BSP's decision come as a surprise to you?
A little bit, Mikey, because the market was divided right before the decision, but we were one of those who actually answered the poll with a cut, that they would cut this meeting.
Were you spot on with the percentage?
Yes, it was a 25 basis point cut as expected.
A lot of people were expecting that the market wouldn't. A lot of people were hoping that they wouldn't. They were hoping that they wouldn't cut rates ahead of the Fed on fears that the peso would weaken. But what we're seeing is strength in the peso, and you expect this strength to continue. What are your thoughts on this?
Yeah, well, for one, the strength of the peso appears to have been rooted on the weakening of the dollar across major currencies and emerging market currencies. So this probably gave the BSP the confidence to carry out the cut this afternoon. It also helped, Mikey, that our inflation rate appears to be poised to hit the 4% target this year. So BSP was able to see through the July print and expect the August, September, and onwards prints to be well below 4% and will allow us to achieve our full year target of below 4%.
The different balancing act. Speaking of two, between growth and inflation, what would you say is the major catalyst for the BSP's decision?
That's right. So for those two key indicators, Mikey, it was actually pretty mixed on the growth number that we received last week. You could see that while consumption was still slow at below 5%, the usual 5 to 6% growth of household consumption continues to print below 5% for the second quarter, same as the first quarter, Mikey. But the headline growth rate of 6.3 was actually a positive surprise. So in that sense, the growth number is a mixed figure that the BSP could really have had a chance to pause on in today's meeting. But what's clear to them is, number one, the Fed is on the way to reduce rates, if not September, sometime later this year. No, looks like a very high probability they will cut in September. And the second is because of the tariff cuts and because of observed declines in rice prices since July, BSP has seen the opening for a rate cut as early as August.
They had the confidence to make this decision clearly.
Yeah. Yes, it's almost like an all clear for them. Yes.
Yeah. So what does this tell you? After 4 years, finally, we're coming into a cycle of a regime of lower interest rates. What does this tell you about where the Philippine economy is now and where we're headed?
Okay, so now that inflation appears to be already under control, we had some issues in 2022 about inflation hitting almost 9% in January 2023. So with the help of the BSP's rate hikes, we've been able to temper it and keep it now within our 2 to 4% target, Mikey. And with the rate cut starting today and maybe some more later this year and early next year, we're hoping that the consumption numbers, which Secretary Balisacan described as anemic, will
Correct.
start to look more normal, growing more than 5%. And this will be felt not just by the retailers, but of course the consumers themselves. Now, many consumers have suffered from very expensive rice prices, Mikey, over the past 12 months, and they will only feel the relief with the tariff cuts. Of course, also with the help of the end to India's ban of rice exports after the election. So even global rice benchmarks are starting to go down. Again, these are the elements that gave the BSP the confidence to reduce its rates in today's meeting.
So going back at all the things that came into play to support their confidence to, after 4 years, actually cut rates. So there was the Fed, the US Federal Reserve, poised to cut their own interest rates. The exchange rate, the peso has been favorable, has been strengthening on account of weakness in the US dollar. External balance and our own inflation also came into account. This sets the stage for how much momentum moving forward would you say? Given expectations, 2 more meetings for the BSP before the end of the year. Expectations are for more rate cuts. To what extent, June?
Yeah, so I heard the governor's press statement. He said that it will take a serious negative performance of the economy for them to cut twice more. No? So it looks like they will keep it to just a couple of cuts this year, and maybe 3 or 4 more next year, Mikey. So that will really help a lot for especially for hopefully for the consumers. No? Aside from lower prices, consumers may also enjoy lower, hopefully, borrowing rates. No?
Yeah, lower borrowing rates, more volumes for the banks. Everything is looking good. It looks like we've got the momentum. Speaking of that momentum, where do you think the momentum will take the peso? We've got, there's a lot of upside potential. Supporting the peso is the seasonality of this period. This is when Christmas is just around the corner. Elections are coming to support that afterwards. Where do you think all of this potential upside will take us in the foreign exchange market?
That's right, Mikey. We're actually expecting the peso to strengthen some more, coming from almost 59 just a couple of months ago, a few weeks ago, just slightly above 58. Now we have crossed the 57 mark, no? And our own expectation is we may actually end the year close to 56, if not below it, Mikey. Although, of course, with a momentary maybe slowdown because we are entering what we call import season. So it's like, again, Jose Marichan saying hello to us that, December is coming, and many of our traders will start to import ahead of the holidays. This will probably slow down the strengthening of the peso temporarily. But by around November, December, as our relatives from abroad go back from the States, from the Middle East, to spend some of their hard-earned money here, we should see a further acceleration of the strengthening of the peso, more so if the Fed confirms that it is ready or carries out the rate cut that markets are starting to expect.
Well, it seems like everything's coming into play for us. Things are looking good. That said, your year-end target for inflation and for GDP, you think expecting any surprises to the upside?
Yes, we're hoping that the government can still hit its 6 to 7% target, Mikey. First half, we were able to achieve that 6% level. But because of the slowing consumption numbers aired by our NEDA head, NEDA secretary, there was a risk that we will miss the 6 to 7% target. Now that inflation is already looking more manageable, and with the help of some reduction in the interest rates, it looks like there could be enough momentum for the growth of the economy to hit the government's 6 to 7% target. And with the peso remaining stable despite the rate cut, and hopefully actually strengthens, no? The peso strengthens further before the end of the year. Even the equity market may actually benefit from it. No? In contrast to the expectations of some analysts that the rate cut would actually be detrimental for both the FX and the equity markets, we are actually seeing the opposite behavior, simply because the US seems to be poised to reduce interest rates already, Mikey. Yeah.
That said, the optimism, the momentum that we'll see on the balance of 2024, you think that's going to be carried through to 2025, given that's when we'll actually really feel the impact of all the rate cuts that they impose in 2024?
Hopefully, Mikey, fingers crossed. Of course, there's so many things that we need to watch. There's the Middle East.
Yeah, barring
There's
any
the US elections that could translate to higher US inflation again. We all have to watch these things. But so far, it looks like there's a big chance that the markets will have a happy Christmas this year and hopefully see an even better 2025. Election spending is going to be strong, by the way, Mikey. That will help our second semester performance improve from prior quarters. And because El Nino is already behind us, rice prices already more stable, possibly declining even further. It's very promising semester, rest of the semester for us this year, and hopeful that next year, because again, the lead up to the May midterm elections, spending throughout the economy will be pretty strong.
Yeah. All right. Fingers crossed everything goes well for the Philippine economy. Thank you so much, Jun.
You're welcome, Mikey.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Over on Wall Street, U.S. stocks close higher as fears of an economic slowdown ease. The Dow Jones Industrial Average and the S&P 500 both increased by well over 1%, while the tech-heavy Nasdaq jumped 2.34%. This comes over optimism over retail sales in July, which increased by 1%, signaling resilient consumer spending. Now let's take a look at the figures at the Philippine Stock Exchange after the BSP cut key interest rates yesterday. Now we're seeing a lot of optimism in the market. I'm seeing a sea of green right now after ending at 66.93 yesterday, just up by 0.2%. As people in the market were wondering what the BSP was going to do. Right now we are seeing a surge of optimism. Everything is in the green. The PSE index is up by 1.4% to 6782, back at the 6700 level. All shares index up as well, up by 1%. The financials, interest rate sensitive sector right there, up by 1.5%. Industrial sector up as well, up by 0.6%. Holding firms up by 0.5%. Services markedly higher, up by 2.29%. Mining and oil counter up by 1%. And another interest rate sensitive sector, the property sector, is up by 1.6%. So gains here on the back of the BSP's rate cut. Let's also take a look at the foreign exchange market to see how the peso is doing. Now, as of today, August 16th, the peso has weakened slightly from its previous close. It closed yesterday at 56 pesos and 97 centavos. It opened today at 57 pesos and 12 centavos. And right now it's trading between the range of 57 pesos and 12 centavos and 57 pesos and 20 centavos. Now, in other news, elsewhere in the region, after slumping at the start of the year, Japan's economy expands at a slightly faster than expected pace. The country's GDP increased by 0.8% in the second quarter from a fall of 0.6% in Q1. Analysts had expected growth for the period at just 0.5%. On an annualized basis, the economy expanded 3.1%, also beating estimates of growth at 2.1%. That's thanks to a strong uptick in consumer spending, which accounts for more than half of Japan's output. The rebound in consumer spending is expected to encourage the Bank of Japan to once again increase interest rates later on this year. Meanwhile, the world's second largest economy is off to a rough start in the second half of the year. China's factory output slowed for a third straight month in July, rising 5.1% year-on-year. That's compared to the 5.3% growth in June. But the country's battered consumer sector slightly improved, with retail sales rising 2.7%. This follows dismal export, inflation, and bank lending reports. Earlier this month, analysts said that Thursday's data puts pressure on policymakers to prioritize measures that support consumers instead of pouring funds into infrastructure. Over in the United Kingdom, their economy continues to rebound from last year's recession. The UK's GDP grew by 0.6% between April and June, in line with analysts' expectations. Now, this follows an expansion of 0.7% in the first quarter. The growth was led by the services sector, particularly the IT industry, legal services, and the scientific research segment. On an annual basis, the UK's economy expanded by 0.9% in Q2, slightly higher than forecasts of growth at 0.8%. Let's take a look now at some earnings data. Property holding firm Vista Land sustains its robust growth in the first half of the year. The company's earnings climbed 11% to 6.4 billion pesos, fueled by strong demand for its projects. Vista Land also reported 19.9 billion pesos in revenue. That's an 8% increase from the previous year. Elsewhere in the world, the Singapore-based ride-hailing company Grab misses second quarter estimates. Its revenue rose 17% to $664 million. This against analysts' expectations of $673 million. That's as demand faltered in Grab's rideshare and food delivery services. Also missing expectations, China's e-commerce giant Alibaba. The firm reported revenue of over 243 billion yuan for the quarter ending June 30th, slightly lower than analysts' expectations of growth at 249 billion yuan. This comes as Chinese consumers are cautious about spending amid a faltering economy. Before we go, let's check on the business headlines in the major news websites. On Inquirer, the Philippine Statistics Authority says that foreign investment pledges soared 220% to 189.5 billion pesos in the second quarter, reflecting a significant improvement in investor sentiment. This is the highest level since the 394.5 billion posted in the fourth quarter of last year. And on Business World, the PSA also reports that the country's poverty rate fell to 15.5% last year from 18.1% in 2021. This translates to 17.54 million people living below the poverty line. Now that's a decrease of 2.4 million from the years earlier. And on CNBC, Walmart, the largest U.S. retailer, beats quarterly earnings and revenue expectations as the company's stores and its website drew more visits and off-premise sales increased. And that's it for Basis Points. I'm Maiki Oreta. Stay tuned to BNC, the Bilyonaryo news channel, for more news. Executive Insights is up next.